Hi friends, welcome to our channel Stock Informer. Let's dive into today's stock discussion. Hello, stock market enthusiasts, and welcome back to our channel. Today, May 26, 2025, was a day of significant positive momentum for the Indian equity markets. We saw widespread buying, especially across key sectors, as both domestic strength and favorable global cues converged to push benchmarks higher. Let's dive deep into today's market action, focusing on the Nifty's impressive run, and uncover the stories behind the day's top gainers and losers. The Nifty 50, India's benchmark index, closed an impressive 148 points, or 0.60% higher, at 25,001.15. This marked a crucial milestone as the index briefly crossed the psychological 25,000 mark earlier in the trading session, signaling strong investor confidence. The broader Sensex also mirrored this positive trend, closing 455.37 points, or 0.56% higher, at 82,176.45. This positive close marked the second consecutive day of gains for the Indian markets, reinforcing a bullish sentiment. So, what fueled this surge? It was a potent mix of internal strengths and easing global anxieties. Let's break down the key drivers. Starting with our internal factors, right here in India, RBI's historic dividend payout. The Reserve Bank of India delivered a massive boost, announcing a record dividend of an astounding 2.69 lakh rupees crore, that's roughly $32.2 billion USD, to the government for the financial year 2024-25. This colossal payout is a game-changer for government finances. Analysts are already projecting it could help bring down the fiscal deficit to as low as 4.2% of GDP from the budgeted 4.4%. More fiscal room for the government means potential for increased infrastructure spending and economic stimulus, which directly translates to a healthier corporate environment and improved market sentiment. It also solidifies expectations for continued low inflation and potentially stable or declining interest rates, both highly favorable for equity investments. India's economic ascent. Adding to the positive narrative, Niti Aayog's CEO confirmed today that India has officially surpassed Japan in nominal GDP terms, making us the world's fourth largest economy. This milestone isn't just a number, it's a powerful statement about India's robust growth story and its increasing influence on the global economic stage. Such news inherently boosts investor confidence and acts as a magnet for increased foreign investment. Early monsoon arrival. Good news for our farmers and the rural economy. The southwest monsoon arrived in Kerala on Saturday, May 24, a full 8 days ahead of schedule, marking its earliest arrival since 2009. An early and healthy monsoon is absolutely vital for India's agriculture sector, which profoundly impacts rural consumption and the broader economy. A bountiful harvest means increased rural demand, boosting sectors like FMCG, auto, and consumer durables, and ultimately contributing to higher GDP growth. This is a significant positive for overall market sentiment. Strong domestic fundamentals. Beyond these specific headlines, the market is broadly supported by robust underlying macro factors and an anticipated momentum in corporate earnings. We're seeing broad-based participation across sectors, indicating sustained confidence among domestic investors. Now, let's look at the crucial external factors that played a pivotal role. The biggest global relief came from the US president's decision to extend the deadline for imposing aggressive 50% tariffs on goods from the European Union, pushing it from June 1 to July 9. This de-escalation in trade tensions was a major positive. Global trade wars create immense uncertainty, so this move fostered a risk-on sentiment worldwide, encouraging foreign investors to allocate capital towards emerging markets like India. We also saw a slight decline in the dollar index, which further makes emerging market assets more attractive. Foreign institutional investors, or FIIs, showed renewed faith in the Indian market. They were net buyers, purchasing equities worth 1,794.59 crore rupees, approximately $215 million USD, on Friday. May has seen impressive FPI inflows totaling 14,256 crore rupees so far, making it the highest in 8 months. This consistent buying from foreign funds is a strong endorsement of India's growth prospects, fueled by both internal strengths and the easing global environment. Brent crude, the global oil benchmark, saw only a slight increase today, up 0.17% to $64.89 per barrel. While still closely watched, stable or moderately priced crude is generally beneficial for India, a major oil importer. It helps manage inflation and reduces our current account deficit, both crucial for economic stability. The market is also keeping an eye on the upcoming OPEC Plus meeting, where a production hike is being considered, which could influence future prices. Now, let's zoom in on the performance of individual stocks, particularly within the influential Nifty 100. Today saw some standout performers. Leading the charge was Mahindra & Mahindra, surging over 2.07% to close at 3,075 rupees. This stellar performance was driven by the company reporting its best ever quarterly and annual performance. Their Q4 net profit jumped an impressive 32% year-on-year to 1,130 crore rupees. Adding to the excitement, M&M announced a highly anticipated 1-to-1 bonus share issue, their first since 2011, alongside a 4 rupees and 25 paise per share dividend. A clear signal of strength and shareholder value. Another strong performer was JSW Steel, gaining 2.13% to close at 1,030 rupees. The boost came from two key factors: a Supreme Court order to maintain status quo on the liquidation proceedings of Bhushan Power and Steel Limited, which brought some clarity to a long-standing issue. On top of that, JSW Steel reported a robust 16% year-on-year rise in consolidated net profit for Q4 FY25 at 1,503 crore rupees, showcasing strong operational results. Bajaj Auto also had a positive day, rising 2.39% to close at 8,950 rupees. The entire auto sector benefited from the broader positive sentiment and the easing of US-EU tariff concerns, as global trade stability directly impacts supply chains and consumer confidence for manufacturers. Outside the Nifty 100 but certainly making waves, BEML surged over 10%, with some reports even indicating a 15% plus gain. This explosive move followed their strong Q4 results, reporting a 9% year-on-year revenue increase and a 12% jump in consolidated net profit. A healthy order book further cemented investor confidence. After a challenging period, Paytm shares gained nearly 2% today. The positive news came from the Supreme Court, which granted a stay on proceedings pertaining to a significant GST show cause notice worth 5,712 crore rupees against its subsidiary, First Games Technology. This legal reprieve brought some much-needed relief to the stock. However, not all stocks participated in today's rally. Some faced headwinds due to specific corporate or regulatory news. The biggest drag today was Eternal, or Zomato, which saw a significant decline of 4.59%, closing at 226 rupees and 65 paise. This sharp fall was primarily due to heavy foreign institutional investor selling following concerns about potential exclusion or significant weight reduction in crucial MSCI and FTSE indices. This stems from recent regulatory changes in its foreign ownership limits. Reports indicate potential passive outflows of a staggering $380 million from FTSE and an expected additional $460 million from MSCI, leading to a major sell-off from index funds. Ultratech Cement also saw a slight decline, dropping 0.60%. Kotak Mahindra Bank slipped 0.51%. Further down the market cap, All Cargo Logistics declined 3.56% after reporting a consolidated net loss of 12.59 crore rupees in Q4 FY25, a worsening from the net loss in the same period last year. This highlights the impact of disappointing financial results on stock performance. So, in summary, today was a highly positive day for the Indian share market. The Nifty's push past 25,000, fueled by the RBI's record dividend, India's growing economic stature, an early monsoon, and crucially, the easing of global trade tensions, created a powerful tailwind. While individual stocks like Zomato faced pressure from specific regulatory and index-related news, the broader market celebrated robust corporate earnings and optimistic economic forecasts. That's all for today's market update. If you gained valuable insights, please consider liking this video. For continuous access to our expert analysis on Indian share market results and announcements, be sure to subscribe to the channel. Your support by sharing this video with your network is also highly valued. Thank you for tuning in.